Hello, this is AJ Macdonald with Macdonald Financial Services. I have Devin Jones here in the office, and today we're going to talk about capital gains taxes or taxes in general on selling your primary home.
Yeah, a very, very good topic right now. I mean, we've seen homes appreciate greatly in the last 5 years. So this is a topic that is going to hit home for a lot of people, especially if you're, selling your primary residence and you're wanting to not necessarily roll that money into the next place. Well, then you probably want to pay attention to this video. So
absolutely. So, and of course, things always change. We'll talk about that in a minute. But as a married person, if you sell your primary residence, you can go back and look at your original cost basis, which is what you purchased the price of the home originally, plus improvements, not maintenance, but improvements. And if you're married, you can add $500,000 to the original price, and that's the amount that you are allowed to sell your house for.
Exclude.
No tax.
Right.
Yeah.
Right.
What happens if you're single?
Pretty much just half of that, right? I mean, the math is pretty simple. You take away one, you're going to actually, the exclusion is $250,000. Yeah. So, and the same, like you said, the same kind of mathematics works with that.
So what if I paint the house? Does that count as an improvement?
That's an improvement, but it's not deductible.
Correct. That's right. What if I rebuild the fence that blew down?
That would help. Again, not going to help.
What kind of things do help?
Why don't you take that?
Well, let's say you were add an addition to your house.
That would help.
Or maybe you decide to
add a bedroom.
Add a bedroom.
Finish the basement.
Finish the basement. Maybe add a shop to the property. Those are all improvements that you can add the cost of that to your original cost basis to kind of try to minimize the tax ramification. Now, something that President Trump floated a couple weeks ago was trying to eliminate taxes, capital gains tax on your primary residence, period.
Right. Again, another idea that's been floated out there that probably not going to get a lot of traction.
No. But if it did, boy, I think the real estate market would take off.
It for sure would. Yeah. There's a lot of equity in a lot of places out there that would definitely come into play.
Yeah. So that's not the rule today. So don't go selling thinking you're not going to pay any tax. If your home has appreciated and you're married more than $500,000, you're probably going to end up paying some capital gains tax on the difference. If you're single and your house is appreciated more than $250,000 plus the improvements, then you're going to pay some capital gains tax. Now, the capital gains tax is going to depend on which tax bracket you're in, but you can be pretty sure you're going to pay at least 15% Fed tax.
Right. Correct. That's been changing a little bit. I mean, it's been moving around a little bit, but as it sits right now, to your point, you're right. You're going to probably pay at least 15%.
Now, we're not giving tax advice. We're not CPAs. We do have some software that we can run called the Holistic Plan. We've done another video about that in the past. You can go back and see that video. Pretty helpful, running different scenarios. But that's how you can avoid paying capital gains tax on your primary residence, depending on improvements or the amount that you're going to end up paying.
Right, as the rules are right now.
Yeah, always can change.
It's a moving target.
If you have any questions on selling your primary house, give the office a call. We'd be happy to schedule a complimentary discussion with you. Thanks for watching.